Wall Street's main indices finished Monday higher as investors gauged the prospects for further advances amid an improved economic outlook for 2018 and buoyant investor sentiment. The Dow Jones Industrial Average ended the session ahead 0.04% at 23,548.42. The S&P 500 was up 0.13% at 2,591.13, and the Nasdaq 100 settled 0.29% firmer at 6,313.61. On Friday, indices had hit fresh all-time highs following the release of a decent non-farm payrolls report, even as the policy-sensitive yield on the benchmark two-year US Treasury note continued to tread water near its highest level in years. Earlier, Credit Suisse's global equity strategy team struck a slightly cautious note on the outlook for stock markets, telling clients they continue to see upside for shares over the next 10 months or so, but added that headwinds may start to appear in the second half of 2018. For now, we maintain an overweight stance toward equities and underweight bonds, noting a risk that the final hurrah could see more of an asset bubble emerge, strategist Andrew Garthwaite and his team said. Swiss's year-end 2018 target for the S&P 500 was 2,875 points, but Garthwaite said he was a little bit more cautious when it came to the back half of next year, seeing scope for a flat market or a correction. Strategists at JP Morgan were somewhat more upbeat, telling clients they remained constructive on global equities, although they believed it prudent to lock in some profits in cyclical stocks. They also believed U.S. earnings had yet to price in any prospect of tax cuts. On the corporate front, shares in CVS Health were among the most active issues, losing 3.54% after the retail pharmacy giant posted better than expected quarterly revenues and earnings. Michael Kors was also in the spotlight, with shares rocketing 14.7% after the iconic fashion brand reported a 26% jump in second quarter profit, while Cardinal Health slipped 1.84% after it said profit in the first quarter fell 13%. Stock in mobile operator Sprint finished 11.54% lower after it called off its merger with T-Mobile US.